In the previous videos related to RETScreen's power, storage, and off-grid capabilities, I looked at Canadian examples that were purely off-grid in the base and proposed cases. In this video, I'll look at a hypothetical feasibility study for a proposed photovoltaic system for a village in West Africa, where the base case would entail extending the electrical grid 15 kilometers to the village. I open the virtual energy analyzer, choose Power, Storage, Off-Grid for the facility type and Photovoltaic for the type of project. I then search the drop-down list for archetypes having grid extension as the base case. From these archetypes, I choose the one with the proposed case consisting of PV plus battery plus diesel genset and a load of 240 kilowatt hours per day, sufficient electricity for a small village. I'll assume that the village is in the north of Burkina Faso, near the border with Mali. In case you wish to follow along, I'll use Ouahigouya as the project location, even though that town is serviced by the grid. We can imagine that the village is not far from there. I hit Calculate and RETScreen configures itself. Keep in mind that the cost estimates RETScreen provides, while generally reasonable for Canada, may not be typical for Burkina Faso. The analyst would need to verify and correct the cost estimates. Here we will make some guesses for local conditions in Burkina Faso. I'll want to use the local currency in this analysis. I go to File, Settings, and change the currency for the current analysis to that for Burkina Faso, the franc CFA with the symbol XOF. At the time of recording, the exchange rate is about 0.0021 Canadian dollars per franc CFA, or 470 francs CFA per Canadian dollar. You can change the exchange rate if you are using RETScreen in professional mode. While I am on the settings page, I might consider the convention used for specifying the energy content of fuels. Outside of Canada and the USA, the lower heating value is commonly used. However, since I've already opened this analysis with the higher heating value selected, I won't change this now. It is best not to change the heating value convention for an analysis that has already been started. On the Facility worksheet, Power, Storage, Off-Grid is selected. The type is photovoltaic, and the archetype is for a 240 kilowatt hour per day load. RETScreen is configured for a feasibility study. On the Energy worksheet, we'll start by adjusting the cost of electricity and diesel fuel. It is my understanding that while about 30% of Burkina Faso's grid electricity comes from solar and other forms of low-carbon, low-operating cost generators, that leaves about 70% to be generated with imported oil and diesel fuel, and therefore it is expensive. I'm going to assume that the unsubsidized cost of electricity is 140 francs CFA per kilowatt hour, which is equivalent to approximately 30 Canadian cents per kilowatt hour. For diesel, I'll simply adjust the archetype's estimate for the exchange rate. $1.20 Canadian is 564 francs CFA per litre. A quick scan of the Notes section reveals that the archetype assumes 1 kilometer of grid extension. In our imaginary example, the grid must be extended 15 kilometers. We will need to make some adjustments. Let's go to the base case power system and load characteristics. The base case is grid electricity. We don't know the maximum power capacity for the connection, but it will certainly be large enough for this village. Besides, this cell being gray, it does not affect RETScreen's calculations, so I can leave it blank. There are annual O&M costs for the 15 kilometers that we will extend the grid. RETScreen suggests that these would be 250 Canadian dollars for 1 kilometer. If I apply the exchange rate, I get around 117,500 francs CFA for 1 kilometer. For 15 kilometers, the question is, should I simply multiply by 15? A part of these costs is likely fixed and a part is variable. I'll guess that they will be around 1 million francs CFA annually. In reality, refining this estimate would be the job of the analyst, but note that O&M currently accounts for less than 10% of the total annual electricity cost in the base case, which is dominated by the cost of grid generation and transmission. So unless O&M costs are much larger than my guess, they won't much affect the analysis. For both the base case and the proposed case, the load is 240 kilowatt hours per day AC. If I had done an analysis for the village and found that the load was larger or smaller than this, I could adjust this. For example, I'm going to change this to 400 kilowatt hours per day AC. The intermittent resource load correlation, discussed in previous videos, is 0, indicating that we expect the load to be uncorrelated with the power output of the solar array. In other words, there will be loads during both day and night, cloudy and sunny times. The peak load, used by RETScreen to determine the capacity of the proposed case power system, has been assumed to be 15 kilowatts. This is fairly low for a village. There might be short periods when many people want to operate radios, lights, and even TVs simultaneously. The analyst would need to investigate whether this should be adjusted. Here, I'll assume a peak of 30 kilowatts. On the inverter and battery page, I'll need to update the inverter sizing to match the peak load. You might be wondering why there are no initial costs specified for the inverter. I'll show the reason for this shortly. Here are the battery parameters. RETScreen has proposed 1.2 days of autonomy. This is lower than in previous videos. One reason for this is the proposed case includes a genset to supply power if the battery is depleted. Another reason is the much lower seasonal variability in the solar resource in tropical Burkina Faso compared with my previous examples, which were both in Canada and therefore at higher latitudes. This being a bigger system than in previous examples, the battery voltage has been raised to 96 volts. This is not a particularly critical parameter in RETScreen's calculations. It is a bit strange to see a mention of -10 degrees Celsius and minimum battery temperature control for a site in Burkina Faso. The average battery temperature derating is close to 0, so I can see that RETScreen is not suggesting that the battery ever reaches such low temperatures. Simply to avoid confusion, I'll change to ambient temperature control, meaning that the battery temperature is assumed to be near the monthly mean temperature. The average battery temperature derating remains the same, confirming that this was a cosmetic adjustment. The archetype's choice of battery capacity was based on a 240 kilowatt hour per day load. I'll update the capacity to match the suggested capacity of 10,555 amp hours, or about 1 megawatt hour, due to the larger load. I then need to adjust the initial costs. We are likely to be using vented lead-acid batteries, but these estimates of the installed costs for lead-acid batteries are suitable for much smaller installations and are based on Canadian prices, which may be higher than in Burkina Faso. I'm going to guess that we can get vented industrial batteries, which have a good cycle life, for a price similar to the minimum costs for vented semi-traction batteries. I highlight that cell, click Paste Data, and find that the initial battery cost will be 63 million francs CFA. Now I go to the photovoltaic array. RETScreen has proposed a south-facing fixed array with a slope a bit higher than the latitude. If, in reality, it would be easier or cheaper to have a lower slope, say 12 degrees, I can change this, but this has very little impact on the PV system operation. The fraction of the load delivered on an annual basis doesn't change. RETScreen proposed a 50 kilowatt array for the 240 kilowatt hour per day load in the archetype. I have increased the load by 2/3, so I'll increase the size of the array by 2/3 as well, to 83 kilowatts. With this size array and 1.2 days of battery autonomy, solar power supplies 80% of the load year-round, with the remaining 20% coming from the peak load diesel genset. I'll adjust the costs for the array. In the cost database, I want to first direct your attention to the column Includes Inverter. For larger arrays such as this one, the cost of the inverter has been folded into the cost of the PV panels, the wiring, the support structure, etc. That is why the cost cell was left blank in the inverter page. We increased the size of the inverter, so we might want to account for that separately, but the inverter is typically a small portion of the costs, so for an initial analysis, it is okay to ignore this. Next, I see that the typical installed price for an array around 100 kilowatts would be 1 million francs CFA. But these are prices for Canada and valid for January 1st, 2019, with prices having fallen considerably since then. I am going to guess that for Burkina Faso, installed costs are only 70% of this. One shortcut is to select user-defined for the settings and apply an adjustment factor of 0.7. I click Paste Data, and the cost of the array is updated. For the annual operating and maintenance costs of the array, I could perform a similar adjustment, or simply pick the value for the next larger array size, if that looks about right. This is the cost per year for each kilowatt of installed capacity. For the entire array, it works out to around 700,000 francs CFA per year. If it turns out that the financial results are very sensitive to O&M costs, the analyst will need to examine in detail costs related to maintenance, land rental, insurance, washing off dust, vandalism, theft, etc. to refine this estimate. I'll need to adjust the parameters for the peak load reciprocating engine. This is our diesel genset that provides power when the load is especially high, there is little sunshine, or both. RETScreen displays a warning that the peak load is not met. Remember that I doubled the estimate of the peak load after the archetype had sized the genset. I'll update the capacity to match the peak load. Then I'll adjust the costs using the cost databases. These Canadian prices are likely far higher than what would be found in Burkina Faso, but I'm not going to worry about that too much. Keep in mind, this is the genset for the proposed case. So if the project is financially attractive, even with these genset costs overestimated, it will only be more attractive with more reasonable estimates. The O&M costs here are for annual regular maintenance, not including overhaul costs, which we will find on the cost worksheet. On the cost worksheet, we will need to update all the costs to match the values we used on the energy worksheet. RETScreen does not automatically copy them over in a level 2 analysis. In a level 1, their sum would be copied over, but in level 2, RETScreen assumes that we wish to break out costs in some detail, and it leaves that to us. The reason that we wish to have a level 2 analysis here is to include the periodic costs. So I'll just have to use the same values I entered previously for the unit costs. Since we want the incremental costs of the proposed case versus the base case, we subtract the cost of grid extension by applying credits. In Canada, a single-phase power line would cost around 10,000 Canadian dollars per kilometer, very roughly. It varies a lot. Applying the exchange rate, that would be 4.7 million francs CFA per kilometer. We need 15 kilometers. A first guess for the cost of the transformer would be 470,000 francs CFA. There is an additional credit for a new connection. This would be a cost from the perspective of a customer in Canada requesting a new account be opened by the utility. Here, however, we are assuming the perspective of a utility tasked with providing power to this village, so I will remove this cost. Overall, the total initial costs, which are actually the additional costs of the proposed case over those of the base case, are 63 million francs CFA. Under annual costs, the regular maintenance costs for the PV system and the reciprocating engine in the base case have been carried over from the energy worksheet. The annual cost of diesel fuel for the genset is also there, and the annual savings have a single figure encapsulating the cost of grid electricity and O&M for the transformer and power line. At the bottom of the cost worksheet are the periodic costs. For the archetype, RETScreen estimates that the proposed case genset will need to be overhauled every 11 years. This interval is fairly long, but we only supply 20% of the electricity with the genset. We doubled the size of the genset, so it could be argued that the runtime of the genset will be roughly halved, and therefore the interval should be doubled. But the overhaul would likely be more expensive for a larger genset, so these two effects can be expected to more or less cancel out. As a first guess, I'll use the 11-year interval and simply convert the proposed cost to francs CFA. According to the archetype, the proposed case genset needs to be replaced every 30 years. Our project is only 30 years, and as we just mentioned, the genset is likely to last longer since it is larger than the archetype and therefore runs fewer hours per year. So I'll eliminate this cost. RETScreen's archetype assumes battery replacement every 8 years, which may be reasonable for high-quality batteries in heavy cycling. For now, I'll copy the figure earlier included in the initial costs. In the initial costs, we did not separate the cost of the inverter from those of the PV array. But if an annual contribution to inverter replacement was not included with the array O&M costs, we should put something here. I'll apply the exchange rate to the archetype suggestion, then double it, since we doubled the size of the inverter, and then decrease that cost by 20% since inverter costs do not vary in proportion to their capacity. There are economies of scale. RETScreen will raise these periodic costs according to the rate of inflation. If we thought that was unreasonable, for example because we expected battery or inverter costs to decline, we would need to adjust them. I'll assume that due to advances in battery technology, future battery replacement will be only 50 million francs CFA. There is a bit of a surprise on the emissions worksheet. RETScreen's database does not have a grid emissions factor for Burkina Faso. This is unusual. But you may remember that I said that around 70% of Burkina Faso's grid electricity is generated with imported diesel oil and 30% comes from solar, imported hydro, and other low emissions sources. I can get a first estimate of the grid emissions factor by using these numbers in a level 2 analysis. I could use either diesel or oil number 6, and I'll represent the low emissions generators with solar, since in RETScreen they all share a grid emissions factor of 0. Based on these assumptions, RETScreen calculates an approximate grid emissions factor that allows the GHG emissions reductions of the project to be estimated. The proposed case reduces emissions by 77 tons per year. Finally, we get to the finance worksheet. We would really need to study the assumptions here, the discount rate, inflation rate, debt ratio, and debt interest rate, in some depth to determine whether they are reasonable for Burkina Faso. They could be very different from these figures for Canada. But if I just accept these and look at the results, I see that this is a very profitable project with a pre-tax internal rate of return on equity of 29% and a solidly positive net present value. It is important to recognize, however, that the cash flow graphs are dominated by the battery replacements every 8 years. The analyst would need to think about the management of this project over the 30-year lifetime. What is the risk that funds will not be available when the battery needs replacement? If the battery is not replaced, the system will need to rely on the genset with the associated high costs and emissions. I'd like to go back to the energy worksheet and see how we can adjust the size of the array. If I wanted to meet a larger fraction of the annual load with solar, say 90% rather than 80%, I could see if I would need to greatly oversize the array. The desired improvement in the solar fraction is 12.5%. Increasing the size of the array by this same percentage, it would be 93.4 kilowatts. With this sizing, 89% of the load would be satisfied by solar. In other words, we are not wasting much of the output of the additional array capacity. With a 95 kilowatt array, I'd meet 90% of the load with solar. I might then want to return to the cost worksheet and update the genset overhaul frequency. It is now supplying half as much power as before. I'll double the interval between overhauls. We could also decrease the annual genset O&M costs on the energy worksheet. These won't scale perfectly with runtime, so I'll not have them, but rather put in 40,000 CFA per kilowatt per year. The finance worksheet shows that increasing the size of the array would lead to a more attractive project. The financial viability of this project is strongly dependent on the costs of grid extension. For a shorter, less costly grid extension, the proposed case might not make sense. For the current set of assumptions, we can estimate this critical distance below which grid extension would be preferable to photovoltaics. Let's say I want to target a 20% pre-tax IRR on equity. I open the dashboard, look at financial viability parameters, and then adjust the length of grid extension on the cost worksheet until I hit the targeted IRR. It looks like the critical distance is around 7 kilometers. This shows how the archetype can be used as a starting point for an analysis, how key parameters can be updated to more closely match the project characteristics, and how the financial implications of various changes to key inputs can be investigated.